Friends, welcome to our today's session. Uh, in the context of international payments, we are trying to understand international codes, how international uh, currencies are quoted. That's what we are learning. And several points or several rules we have already understood. We'll continue uh, from those points. Let me share the screen with you right now. So various rules we have already discussed. For example, uh, in any transactions involving foreign exchange, you are buying one currency and selling one currency. And we also know in an exchange rate, two currencies are involved. They are called as pairs. Then we know direct quote means an exchange rate which expresses home currency per unit of foreign currency. And indirect quote means a rate as foreign currency per unit of home currency. And we also know uh, that what is direct quote for one country, that will be indirect quote for another country and vice versa. We can convert direct quote into indirect quote, that concept also know. Okay, direct quote is the inverse of indirect quote, this concept we know. We have done some exercises in your last class. But today, friends, we are going to learn this concept. This is called as European terms or American terms of expressing a quote. Right. As we are discussing in your previous class, normally all of us are satisfied with direct. So if someone will say that rupees 75 per dollar, we are very happy. It is very easier for us to understand that code. Is it not? On the other hand, one will say 0.0133 dollar per rupees. It will be difficult. It will be little difficult for us to understand that code. But you see how it will be possible if everybody will try for direct code. There will be so many codes. Suppose roughly 150 currencies are traded in your country. So everyone is trying direct code. Okay, so that means for each currency, that means for 149 currencies, you want your direct code. Every country like that. Every country wants code for 149 currencies. Is it not? So totally how many codes will be having? 150 into 149. Suppose 44,700 quotations will be there in the international market. 44,700 quotations will be floating and they will be fluctuating in every second. So how to manage that? How to take decision? It's a very, very complex task. To avoid that thing, what has been done? What is the practice followed? Okay, there are, you can say, two types of codes. We can classify the codes in two terms. You can call it as American term or European term. A code which is direct for an American. Direct for American means for American it's a direct code. A direct code means home currency by foreign currency. That means you are talking about dollar by something. If it is dollar by something like dollar by rupees or dollar by pound, dollar by yen, dollar by lira, dollar by rand, all these things are examples of American. And what is European code? What is indirect for an American? Okay, for example, rupee by dollar, yen by dollar, pound by dollar. These are indirect for American. Therefore, it is called as European terms. And as you know, rupee by dollar, you are very comfortable with that. So European term is convenient, or people feel more convenient with European terms. International codes are normally in European terms. Okay, but there are some specific currencies like pound, euro, South African rand, Australian dollar, and New Zealand dollar, where American codes are accepted. Otherwise, most of the currencies, European codes are normally floated in the industrial market. Okay, for a non-American like us, European code or international codes are in direct mode, but for American, it is in indirect mode. I think broadly you got some idea what is European term and what is American term. Yes or no? Can you reply?
Yes, sir.
Okay, fine.
Yes, sir.
Okay, good. Now, let us move ahead. Now, if I am giving you a question like this, now you have to solve this question right now. Compute the nature of code in respect of following spot rate. Spot rate means to the current rate. For each American term, give corresponding European term and vice versa. First, tell me 1.75 US dollar per pound. Tell me it is European or American?
American.
American, because it is convenient for an American, direct for an American. Then 1.95 Singapore dollar per dollar.
European.
It is European.
European.
Okay, first one you told is American, second one is European. Can you convert this American into European and European into American? What to do? Tell me the answer.
Simply divided 1 by 1.75 and 1 by 1.95 into.
Simply multiply it with 1 by that amount. Okay. So first one you see it is direct for American, indirect for British. It is American term for both. Okay. Corresponding European quote is 1 by 1.75. It comes to 0.571. Second is indirect for American, direct for Singapore citizen, European terms for both. So when I say European, it is European for the entire world. When I say American, it is American for entire world. But when I talk about the direct quote, it's direct for a specific country. When I say indirect quote, it is also indirect for a specific country. Are you getting my point? Are you getting me?
Yes, sir.
Yes,
Fine.
sir.
Thank you. Thank you. Okay. If that concept is over, now we'll be learning the next concept, which is again one more important concept. This concept is called as the bid and ask. Some of you might have heard this term: bid rate, ask rate, and spread. Spread is the margin between this thing. But we'll understand it like this: bid rate means the buying rate. Buying rate means the price at which the bank will buy the foreign currency. Okay, not that you are buying. But as you already know, in an international transaction, in every transaction, you are buying something means you are selling something. Okay, you are buying something means you are definitely selling something. Suppose you are let us say buying dollar for rupees. Then what is that you are selling?
Rupees.
You are selling rupees
Rupees.
and buying dollar. You are selling rupees and buying dollar. Okay, and what is the meaning of bid rate? Bid means
The price or the price to which a buyer or we are ready to buy something by particular
no,
currency.
not we are ready. Okay, again I repeat, it is the price at which bank is ready to buy.
Okay, sir.
Okay, when I say bid rate is buying rate and ask rate is the selling rate, and the bid means it is the bid buying rate for the bank. Ask means it is a selling rate for the bank. So when you are buying dollar, you are saying, but actually you are selling rupees. Is it not?
Yes, sir.
Okay. So rate is quoted by bank. So you have to refer which rate. So therefore, it is important for us to understand what is buying rate, what is bid rate, and what is ask rate.
Sir, in case of individual investor in the stock market, sir, we are giving bid and ask price. So in
See,
that case, we are
it is similar kind of thing. Okay, it is similar kind of thing. That bid rate and ask rate, we are not talking about that rate. We are talking about the foreign exchange bid and ask rate.
okay.
Okay, this is about forex market, not stock market. Okay, try to understand. In case of forex market, what will happen? You will buy from a dealer. A dealer will give his quote, and this is bid, put, and ask. Okay.
Yes.
So for the timing, don't conflict it with stock market. Are you getting? Okay. Now, friends, let me. Maybe in some other time we'll discuss that stock market concepts. But today you will understand that when you say bid rate means the price at which who is willing to buy. Can you read it here?
Bank is
Bank is willing to buy. Bank is the dealer. Bank is the forex dealer. Okay, bank is willing to buy the forex currency, foreign currency. And what is asked? The price at which bank is willing to sell the foreign currency. Okay, and also we need to understand the term spread. Spread is the difference between ask and bid. Okay, suppose bank is buying dollar at 75, it is selling at 76. So spread is 1. Okay, so bank is buying dollar at 75 and selling it at 76. Let us discuss this point right now, first of all. Then I will tell you this thing. Normally, you see, we'll be learning that thing also. Bid precedes ask. Meaning, suppose you are asking a bank, what is rupee by dollar? Is it clear to you? What is rupee by dollar? Bank is saying 75, 76. That means what? What is bid rate? What is ask rate? Which is bid? Which is ask?
76 is ask.
76 is
Ask.
76 is ask, and what is bid?
25.
25 is no, sorry, 75 is. So this is your bid. This is your ask. Okay. So normally, as I told you, bid precedes the ask. This is one thing. Second thing also you have to remember that you will buy at a lower rate, sell at a higher rate. This is normally everybody will do. The difference 1 rupee is margin. Okay. Can a bank will buy at 76 and sell at 75? Whether any conscious bank will do that. So buying rate is always less, selling rate is always high. Is it not? So always it is A minus B. A is higher, B is lower. A minus B, which is called as spread. So what is the spread?
1.
Spread is 1. Okay. In some currencies, spread may be less. Some currencies, spread might be more. It depends upon the depth in the market. It depends on the stability of that currency we are talking about. If currency is stable, there is no much fluctuation, then margin might be less. Bank may take risk. Okay, it depends upon the size also, size of demand and supply of that currency. Okay, so if bank is taking more risky, it will give more spread. That means margin will be more because currency is not demanded. Currency is highly fluctuating. Then spread might be more. 1 rupee margin may not be sufficient. It may give 10 rupees margin. Understood? So spread depends upon various things. Okay. But let us say now, tell me, ask one thing. Bid means buying rate, yes, means selling rate. Now let us say you got $1 lakh. Today you got $1 lakh. You got it from your father from US. $1 lakh, and you want to exchange it for Indian rupees. Can anyone tell me how much money you will be buying? You will be getting. How much money you will be getting? How much you got? $1 lakh. My question is that how much rupee you will be getting? Please answer me this.
So 75 lakh.
So let us see. How many of you are agreeing? Are you agreeing to the answer given by Avismith?
Yes, sir.
Yeah. See, okay. You are. Yeah. Subhasri is also agreeing. Okay. So this is.
Sir, please repeat the question, please.
Okay, let me repeat that question. Question is like this: you are having $1 lakh. You have received it right now. How much Indian rupees you will be getting if you convert it into INR? So friends, now you see, you got $1 lakh means what you are going to do? You are going to sell that dollar. Is it not? You are going to sell that dollar. But what bank will do? Bank will be buying that dollar. So what is applied here? The bank's buying rate. Buying rate means you'll be getting 75 lakh rupees. Is it clear to you?
Yes, sir.
Yes or no?
Yes, sir.
Yes, yeah. Because you are selling dollar now. But let us say same situation. Let us say you are planning to go abroad. You want to buy dollar now. You want to buy dollar. Buy dollar means you want, let us say you want some dollar. Okay. And you are, let us say you are having, change the situation. Let us say you are having rupees 1 lakh. And you are going to bank, you are asking that I want dollar. Tell me how much dollar you will be getting. Now you understand that you are having
1
rupees.
lakh by 76.
1 lakh by
76.
76. Because now you are selling rupees. Okay. When you are selling rupees, the sales price is applicable, that is 76. So you'll be getting how much? 1 lakh divided by 76. That many dollar you'll be getting. Okay. When bank will sell dollar, what is price applicable to him? 76. When bank is buying dollar, what is available rate applicable? 75. Did you understand?
Yes, sir.
Good. Yeah. So this is the concept that we are going to learn. The bid means the price at which bank is willing to buy foreign currency. Ask is the price at which bank is willing to sell the foreign currency. And spread is the difference between ask and bid. And the size of the spread normally depends upon the stability of the exchange rate. If exchange rate is stable, then spread is less. If exchange rate is unstable, then exchange rate is, I'm sorry, then spread is more. Depth in the market, that is one more factor which affects the spread. Depth means the volume. Okay, if the volume is more, spread is narrow. If volume is less, spread is more. There is one more rate which is also used for reference purposes or for understanding the trend, that is called as the middle rate. Middle rate is bid rate plus ask rate divided by 2. Okay. And you have to keep this thing in mind. If the bank is buying currency from you, you will be selling that currency to the bank. And always it's the bank who wins. Why bank wins? Because margin goes to bank. Bank gets money out of this transaction. And when I say bank, I am exactly referring to the forex dealer. And here bank means bank is the forex dealer. Okay.
Yes, sir.
Well, now quickly we'll move to the next our next rule. This is about rule 8. It talks about certain things, basic things. Of course, we already know these things. When I say something is a direct quote, that means if it is a bid quote means buying quote. It's a bid on the foreign currency. Why it's a bid on the foreign currency? Because when I say direct quote means what? Home by foreign. Home by foreign. Okay, that means how many home currency per unit of foreign currency. So it is a bid on foreign currency. That means foreign currency is the commodity which is going to be bought. If it is a buying quote. If it is a ask quote, that means selling quote, then ask is on foreign currency. That means when it is a direct quote, always it is a foreign currency which is the denominator, which is the foreign currency which is bought and sold. But in indirect quote, it is reverse. It is forex by home, foreign by home. Okay. So in an indirect quote, if it is a bid quote, it is a bid on the domestic currency. And if it is ask quote, it is a ask, not the selling quote on the domestic currency. Okay. So in indirect quote, it is the domestic currency, which is the commodity, which is bought and sold. But in a direct quote, it's the foreign currency, which is bought and sold. This concept also you have to remember. Okay.
Yes.
Are you getting me? Well, friends.
Yes, sir.
Now, let us move to the next rule, rule 9. It's the normal practice to write the currency of home currency in the left hand side. So normally, suppose I am writing in here, it's an example only. Suppose I am writing rupees 75 is equal to $1. That means if I writing like this, it gives an indication that I am from India, because in the left side I will write my currency normally. If I will say yen 33 is equal to rupee 1, that means this quote is from Japan. Okay, that means $1 is equal to 68 or 75, as the case may be, right? Or 1 rupee is equal to yen 33. Are you getting? So normally, if this kind of quote is there, you should understand that this quote is from India and this quote is from Japan. Okay.
Yes, sir.
Let's move to the next rule. Yes or no?
Yes.
sir.
Yes,
Rule,
sir.
rule 10. Rule 10 is bid on one currency is the ask on another currency and vice versa. We need to understand this thing. When I say I'm bidding or buying dollar, means I'm selling rupees also. Okay, suppose I will say bid rate is 68 per dollar. This means the bid rate means buying rate. It's buying rate on what? On dollar. So as I told you earlier, always it is priced by commodity. That means this is the price, this is the commodity. When it's a bid rate, it is a bid rate on dollar. So this is the buying rate of dollar. That is, bank is buying dollar and selling INR. Okay, so if you're asking INR rates, that means 68 INRs are sold for $1. So 1 INR is sold for 1 by $68. Therefore, bid for one currency is asked for another currency and vice versa. Okay.
Yes.
Yes, sir.
Yes, sir.
Yes, sir.
Good. Next rule. This rule also you already know. So in a two-way quote, that means when bid and ask is there. One-way quote means only one rate will be there, but two-way quote, bid precedes ask. We have already seen that thing. So for the example I gave you 75, 76. Bid precedes ask. First quote is always bid, second quote is always ask. Okay. So if I say 68, 67, 68, then 68 is the bid, so 67 is the bid and 68 is the ask. And also spot bid is always less than spot ask. So bid is always less than the ask. Spot bid is always less than spot ask. Similarly, future bid is always less than future ask. But you cannot compare a spot with future. Spot has to be compared. Spot bid is less than spot ask. And what is spread? Spread is A minus B. That is ask minus bid. Okay. Is it okay? Are you getting me?
Yes, sir.
Okay. Now, if you have understood this thing, let us try to solve this question. Okay, some of you please read the question A first. First, let us solve question A.
The quote by a bank is rupees 61 to $62. Compute BID, ask and spread.
Yeah, first case we will solve. That you tell me what is bid, what is ask, and what is spread. Any of you can reply. What is bid, what is ask, what is spread.
The bid is 61, ask is 62, and spread is 1.
Yeah, so it is talking about rupee by dollar. Rupee by dollar is 61 bid, rupee by dollar 62 ask, and spread is 1. Okay, I think first answer is very simple. Yeah, now please read the question B.
Sir,
Yeah.
in the question number 1, the bank is buying the dollar
Bank is,
or buy. So
yeah,
bank
if
is
it is a bid
buying.
code, if it is a bid, yeah, bank is buying or selling the dollar. Okay, so how to understand? You see, this can be converted. When I say, let me show you. As I told you earlier also, I think we need to explain it once again. The quote given to you was something like this. Suppose rupees 75, 76 per dollar. This is the kind of quote. So you can write this thing, rupee by dollar or rupee by dollar is equal to 75. It is the bid, or rupee by dollar, ask is 76. In all these transactions, when you're writing rupee by dollar, you have to understand. Always, this is the thing which is being traded. This is the thing which is bought and sold. Okay, so this is the commodity. In international market, this is the commodity and this is the price. So always the numerator is the commodity. Sorry, numerator is the price and denominator is the commodity. Okay, so this is rupees rupees so much for 1 unit of dollar. It may be a bid rate, it may be an ask rate. But always when it is rupee by dollar, this is the commodity, this is the price. This is being traded, this is bought and sold for a price for this much of currency. Understood?
Yes, sir.
Yes, sir.
Okay, now please read the part B of the question.
Spread is 0.43, middle rate is 22.195. Find bid or ask rate.
This you please try to solve. You know what is spread, what is middle rate. Let us see how many of you are able to solve it. Will you be able to solve it?
Yes, sir. Yes, sir.
Should I help you or you'll be able to tell me? You have to tell me what is bid, what is ask. These two rates I'm looking for. Spread is 0.43.
Sir,
Yeah.
sir, bid is 21.765 and ask is 22.625.
Let us check. Let us check this answer. But when I say spread is 0.43, that means what? A minus B is 0.43 and middle rate is 22.195. That means A plus B by 2 is 22.195. So you can now solve this equation. A plus B by 2 is equal to 22.195 and A minus B is equal to 4.3. You need to find out what is A, what is B. That's it. Okay. Right. So A minus B is equal to 0.43. So B is equal to A minus 0.43. Second, you already know B plus A by 2 is equal to 22.195. Or what you can do, you can replace B with A. So A minus 0.43 plus A divided by 2 is equal to 22.195, or bit is 21.98, ask is 22.41. Obviously, this was your answer.
No, sir. My answer was wrong.
Where you committed mistake? Maybe in bracketing.
Yes, sir. My answer was wrong.
Yeah. So you see, if you see such a simple question, you see, but if you understand it wrongly, that means if you compute the bit rate as rate wrong, then your decision will be wrong. Okay.
Yes.
Maybe you will enter into transaction, you will raise invoice in a different pricing. So that is the complexity in interest business. One need to be extremely careful. Okay, it will affect your decision.
Yes.
Okay, let's move
Yes,
ahead. Yeah, so let us try to solve this question. You see, rupees 47.10 and 47.25 is a per US dollar is a direct quote. Okay, it's a direct quote. Now you understand which currency by which currency. Another direct quote is yen by pound 179, 180. Okay. Then what is the question asked? Country from where quote is made? Bid, ask and spread. Okay, first let us try to solve this thing. First part you see, country where from quote is made. First quote is made from which country?
India.
India, you know, it is in the LHS and also it is direct. Second quote is from which country?
Japan.
Japan. Okay. Then what is bid, ask and spread?
Sir, the 47.10 and 179 in the A and B are bid.
Bid,
47.25 and 180 are
ask.
and the difference between two are split.
Yeah, 0.15 and 1. That's the difference, no?
Yes.
Yeah, 0.15 and 1 is the spread. Now, what the question is? For the ask price, okay, 1, currency bought by the bank and currency bought by you. Ask price. What is the ask price? Let us say this is the ask price is 47.25. Okay, so rupee by dollar is equal to 47.25. So what is the currency bought by the bank? Can you answer this? A typical question. Already I had explained you those concepts.
Sir, as you have said, the denominator part is the commodity and it
Yes.
is been exchanged. So
Yes.
in that case, it is the dollar.
So your answer is dollar. So this is rupee by dollar. Okay, but it is talking about the ask price. Ask means it is selling price. That is the selling price of dollar. But the question is asking for the currency bought by the bank. That means bank is selling dollar, but what bank is buying?
Rupee. Bank is buying rupee.
Understood what the question is asking? If you are talking about the ask price, question is asking what the bank is buying. Question is not, it's not asked what the bank is selling. Bank is for sales price, then the commodity. So what the bank is buying?
Rupee.
Did you understand? Then currency bought by you, what you are buying?
Dollar.
The ask price. Ask price means selling price. But selling price means selling price for the bank. Okay. What is the thing that you are buying? You are buying means bank is
Dollar.
selling. Okay, right. Similarly, answer me the second bit. That is for the bid price. Bid price means this thing. Suppose rupee by dollar is equal to 47 by 10. Currency bought by the bank, dollar, and currency bought by you. What is the currency bought by you?
Rupee.
Rupee. Bank is selling means you are buying. Okay, so this is the answer to that question. Okay, so first quote we have discussed. Second quote also, you can also think this is the answer. This is the question. Sorry, this is the question. You can have a look. You can save your screen also, and this is your answer. Okay, friends. Friends, we'll stop here today, and we'll catch up in your next class with some other points. Thanks a lot. Thank you very, very much.